Good afternoon. My name is Josh Mindlin here at Chaikin Analytics, and I'd like to welcome you to 5 Simple Steps to Finding Winning Stocks in Just 15 Minutes a Day. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. As a reminder, this webinar is being recorded and will be sent to all registrants. Be sure to submit your questions for the webinar through the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I'll be available to respond to your questions throughout the webinar. Sandy Chaikin is co-founder of Chaikin Analytics, a groundbreaking stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy is living proof that you don't have to be a financial expert to pick winning stocks. Thousands of investors attend her industry events and weekly webinars on fearless investing by following the Chaikin method. NASDAQ.com, Daily Worth, and Elevate all feature Sandy's investing articles and analysis. Sandy has created a workbook to help individuals follow her proven process. You can download your complimentary copy of the workbook for yourself by clicking on the link in the chat window. To get us started, here's Sandy Chaikin.
Josh, thanks so much, and thank you all for attending today's session. I know that more than half of you have come from the recent presentation Mark gave last week with Jim Cramer, where they talked about their stock ideas and kind of compared notes on what they liked. And for those of you that did attend that and also attended their one back in January, today is all about showing you how to find those stocks. That presentation with Mark and Jim was not meant to really drill down into the exact mechanics of how to find these stocks and how to know when to buy and sell them, but that's what today is all about. So sit tight, and you can use that wonderful background knowledge from Jim Cramer and Mark, and today you'll put that into its steps. So let's look at where we are in the market before we get started with the specifics. So I always like to look at the SPY, the S&P 500. This is the benchmark against which most investors measure themselves. And as you can see here on this chart, this zigzagging is the price. It's gone pretty much straight up since this dip pattern back in February and March, where it reached that low. So really since March, April, it's pretty much been on an upward trend line and now has broken through that 52-week high. It broke through it on Friday and it broke through again today. So both Mark and our chief market strategist, Dan Russo, are very bullish on the market. They see a strong market ahead based on a strong earnings-driven market. Q2 earnings are now finished, and I think it was like 78% of them beat analyst estimates. It was very high, but basically all good, low inflation, booming economy, broke through the all-time high. So they're both seeing a strong market ahead. With a slight caveat of typically after Labor Day and also before a midterm election, you can see some dips. So use those as the buying opportunity. Use those little 1 to 3 to 5% dips as a buying opportunity. And today is all about making a list of stock candidates and stock ideas that you can have at the ready so that when we do get these dips, you're ready to go. This yellow arrow here on the right is right above Chaikin money flow. The label for that is kind of overshadowed by the daily chart, but you can see this from Chaikin Analytics that the money flow is strong, which means that investors and institutions have been investing in the market since May. When this goes green, it's typically a very good sign because if institutions are buying stocks, they tend to push the price up because they reduce the demand. It's all based on supply and demand. All right, so let's, with that being said, let's look at what the problem is. So if the stock market is this strong, how are individual investors doing? Well, not as strong. The research shows that the S&P has grown an average of almost 10% a year over the past 20 years, yet individual investors have only averaged 2.5%. So that's a huge gap of what 7.5% off what the typical S&P 500 has done. So why is that? Well, it's basically because investors are individuals, they're not machines, and they buy on emotion, not fact. So today is all about giving you the 5 steps to follow so that you have a fact-based, rules-based methodology and put that emotion, leave that emotion at the door. All right, so there's been a lot of volatility recently with earnings. Stocks can go up as high as, gosh, 10, 20% spike on a positive earnings report. If a stock beats the analyst estimates and has strong guidance, it's not unusual for it to spike up 10, 15%. This is why I love earnings season, and I love investing when you have these strikes. So again, use these spikes as opportunities. Use this to sell. Use the dips as an opportunity to buy. And the reason you want to do that is because when you trade on emotion, that's fueled really by fear, right? When you see, like, say you see a 5% dip in the S&P 500 or the market or the stocks you're investing in, and you think, oh my God, I better sell before they go down any further. Well, this type of emotional trading, emotional investing can cost you over 4% a year, the research shows. That's a big cut out of your profits. So you really don't want to be trading using your emotions. You want a rules-based methodology. And what I like to do is follow Warren Buffett's saying, which is investors should be fearful when others are greedy, which means fearful meaning selling, but you only sell when others are buying. So in other words, when you see that money flow is strong in a stock and institutions are buying, that's a good time for you to sell because they're ramping up the price. Greedy when others are fearful. In other words, buy when others are selling. So when investors are acting on emotion and selling and the price is going down, I mean, with all things being equal, that it's still a good candidate, and I'll show you how you know whether it's a good candidate or not, that's the time to buy. So just keep that in mind. It's basically, sell when others are buying, buy when others are panicking. Because it's hard to make money if you invest in actively managed mutual funds. The research shows that over 81% of actively managed mutual funds underperform the S&P 500, and this is for the last 5 to 10 years. So putting your money away in a fund isn't the safe bet that you may think it should be. Our solution is to invest in individual stocks, and we rank them as bullish rated stocks when certain criteria are met, which is part of the methodology I'm going to show you. But these are the type of stocks that I'm going to be talking about today. These are stocks, all of which I'm either currently in or have been in. And since I only hold 10 to 15 stocks at any given time, this is a big chunk of my portfolio. It shows 1 year performance. S&P over 1 year is up 18%. These stocks go anywhere from 48% up to 123%. Well, wouldn't you rather be in a stock like Boeing or Crocs or Centene rather than park it in an S&P 500 fund? I have a certain portion of my portfolio in an S&P 500 index fund, and that's really for diversification. I have about 15, 20% of my portfolio in the SPY. That's fine, but if you want these outsized returns, you want to be able to identify bullish rated stocks, winners like these, and know when to buy them and when to sell them. And that's my promise to you today. I'm going to give you the 5 steps to not only finding these winning stocks, but when to buy them and when to sell them, and when to do it quickly, because we're all starved for time, right? I mean, I say we're in a time poor economy. Nobody I know, certainly not me, has enough time in the day to do what I want. So my simple methodology can be executed in 15 minutes a day, truly. Okay, so very quickly about me. Back in the early 70s, I guess, 70s and 80s, when I worked in New York, I started a 401k plan with L'Oreal and with Elizabeth Arden. I was a senior marketing executive at both of those cosmetic companies. And as my portfolio grew, I felt it prudent to put it in the hands of a wealth manager who would have more experience and expertise than I. Um, and however, when 2008-09 came along, the fund dropped by 40%. And that was a pretty devastating blow, to put it mildly. I had worked really hard to build this 401k plan up, and to see it disappear, but over almost half of it disappear practically overnight was a pretty devastating blow. But what that did is it really made me resolve that I needed to take control of my financial future and learn how to invest my money, because after all, I'm working hard to create this money, and then I turn it over to somebody else. That really doesn't make a whole lot of sense. But I never had the confidence to feel like I could do this. But having the tools that we created here at Chaikin Analytics has really given me that freedom and that confidence. And that's what I want to share with you today, because I think it's really important for each one of us to take control. It's fine to work with a wealth manager, but even when you do, you still want to have a voice at the table. You want and need to be knowledgeable about your future, because it is, after all, your future. So that was actually the catalyst for Mark and I starting the company back in 2009. Mark was in retirement, and he saw that there were literally millions of people like me who had become disillusioned with Wall Street, had taken our money out of traditional brokerage firms like I had, and like me, had set up a self-managed account. I set up an account at Vanguard and put the money into the SPY until I could figure out what to do. That was about the time Mark and I were getting together. So we started this company after this fiasco in 2009, and the goal was to give individuals the same edge as the pros. Mark had created tools and technical indicators for the professionals and institutions for over 40 years on Wall Street. What he said is that I'm going to give individuals the same quality tools, but in a format that we can understand. And that's what we're going to be going over today, exactly what he did and how I've put that to use. All right, so why should you listen to me over the next hour? Well, because the research shows that 4 out of 5 pros underperform the SPY, and I beat the SPI, I'm in essence outperforming 4 out of 5 pros. I started investing in stocks in 2012, shortly after we came out with the Chaikin Analytics platform. And I went into a number of different types of stocks. Ones I knew, and then I got into these small cap stocks, which can be very volatile, but also very profitable. And then, as you can see, I'm in stocks now that you probably heard of: Boeing, Lam Research was last year, Centene, Valero. In any event, these are some of the winners that I showed you earlier on that stock chart, and these have contributed handsomely to my overall profit. So what's the point of all this, after all? It's okay to say we want to make money. I grew up in a time when it was considered impolite, inappropriate for women to talk about money, believe it or not. So it's been kind of a learning curve for me to be okay with it, but I'm now more than okay with it. I really have fun making money in the stock market, and I consider it fun. And I make money so that I can put some aside for retirement, put most of it aside for retirement, but I also feel it's important to celebrate along the way. So Mark and I have reaped the rewards of some of my trading by taking some wonderful vacations to Turkey, to Italy several times, to Vail. But have something in mind that have a goal in mind that you want to use some of that profit for. You obviously want to put most of it into your retirement account, but think about where you want to spend some of that profit so that it makes it fun if you have a kind of a goal in mind. So I'm going to pause here for 1 minute to ask you, what are the challenges that you're facing right now? What gives you pause to either buy a stock or to sell a stock that you currently own? If you can just check off all that apply, and Josh will give you a few minutes to do this, that would be really helpful to know where you all are coming from.
I'll give it just a few more seconds here, Sandy.
Okay, great. Thanks.
All right, let's show everybody what it looks like.
All right. Ta-da.
I know not everybody got it in, but here we go.
All right, so timing, no surprise there. That is always the leader. It looks like number 2 is uncertainty, volatility paired with info overload, right? Those are head to head. And then it looks like emotions is the next one. Okay, great. Thank you all very much. And Josh, thank you for putting that poll up there. That is typically what we find when I ask this question. No surprise. And because it's no surprise, I've built that into the 5 steps. So this is exactly what we're going to be talking about today. Timing, your biggest challenge. When do you get in? When do you get out? How do you deal with information overload? There is so much out there with the 24/7 news programs, with Instagram, Twitter, email, texting. I mean, you name it. We're just basically inundated with information. How do you make sense of it? And how do you take that emotion out of your investing or trading so that you're not fearful? How do you build confidence? I mean, I say confidence is at the root of good investing, because if you're not investing with confidence, you're most likely not making good decisions, or you're not making any decision at all. So to have confidence is key, and that's going to overcome that fear and overcome that emotion. So you can get the confidence by embracing these 5 steps, and we'll going over each of the one, which you can also follow in the workbook that Josh referenced earlier. So all of the slides and charts are going to be from Chaikin Analytics. As you can see here, this is a shot of the desktop workstation as well as iPad. They both come bundled in the same subscription to our members. And let's start with 1, tools that you can trust. You've got to have confidence in the tools that you're using if you're going to be basing financial decisions on them, right? I mean, that makes perfect sense, I think. So our tools are based on the rating that we call the Chaikin Power Gauge rating. As you can see here, it looks very simple. It's basically a very bullish and goes back to a very bearish rating. It looks like the kind of the gas gauge on an old-fashioned gas gauge, I should say, on cars. But what this does is it looks at the outlook, at the potential of a stock to out or underperform the market over the next 3 to 6 months. And this is a really important component of what everything we're going to be talking about today, because this is integrated into every single one of those steps, the Chaikin Power Gauge rating. So what is this? Well, it's based on these 4 fundamental components here: financials, earnings, technicals, and experts. Financials, for instance, are factors that Warren Buffett places a lot of emphasis on, whereas Jim Craner puts a lot of confidence in earnings. He uses earnings. I know there's a lot of people that base they're investing on technical indicators, and the expert view, which I'll show you in a minute, is kind of our secret sauce. But each of these four components takes the information, the data that you can see on the right, and basically puts it into a rating that is very easy to understand. Green is good, red is bad. So for any given stock, you can get an overall rating, as you see here for Google, Alphabet, which is very bullish, or you can, if you're focused on one of these components in particular, you can drill down and see exactly what's making that up. So here are the 20 factors that make up the overall power gauge rating. And this, again, was created by Mark after the 2009 meltdown, when so many individual investors were bailing out of Wall Street and feeling their losses and feeling disillusionment. So the goal here was to give individuals like us the same edge as Mark had given the pros for 40 some years, but in a format that he could understand. And that's why you see the facilitation of just, the green and the red. So each of these 20 factors were tested rigorously, starting with a universe of over 200 factors. Mark whittled it down into an algorithm that incorporates these 20 factors. They all have different weightings. That's Mark's secret formula. I don't even know that. Doesn't matter. I wouldn't know what to do with it anyway. But they all go into an algorithm that then churns out a rating not only on each of the 20 factors, but on each of the four components, and then an overall rating, as you can see here for Alphabet, that's very bullish. So I've outlined a few, or highlighted a few in red. These are the ones that I typically use and drill down on myself to make sure that these red ones are bullish before I buy a stock. I said earlier that the expert opinions are kind of our secret sauce. This is data that it's not likely or not easily available elsewhere, but the short sellers are considered the smartest guys on Wall Street. And they short, or basically sell, a stock before they own it because they're betting that stock's going down. Well, I don't want them to be betting on a stock I'm interested in buying that it's going to go down. I don't want them shorting it, which means that that rating would be green or bullish. Likewise, inside activity has been very predictive, because insiders know more about a company than you, me, or even an analyst, right? I mean, they're working there. They know the inside scoop on a company. So and this measures their buying, not their selling. They could sell for a lot of different reasons. They need cash for school or a car or whatever. But they're only going to buy it for one reason, and that's because they think that stock's going to go up. So if they do, it's bullish. So I want to make sure that factor is bullish as well. You can see the green ones under earnings surprise, earnings trend, and even earnings consistency. I like to look at all of these when we're in earnings season. We just finished, so we don't need to deal with that on this presentation. But when we are, the 4 times a year that we are in an earnings season, I like to drill down on these as well. So other than that, I really look at the overall rating. And if it's bullish or very bullish, that gives me a go sign on exploring a stock further. If it's neutral or bearish, I just skip over it. I mean, no point in even knowing anything more, spending any more time. So here's like a substantiation for using a model like the power gauge model. This is by a well-known quant analyst. He says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And you've already told me that emotions get in your way for a good part of you. Admitted that, and it's perfectly common. We're humans, so we we act on emotion. It's pretty hard to avoid that. But if you can put that aside and depend on a model to guide you, as opposed to your emotions, your life is going to be a lot easier and a lot more profitable and a lot less painful. So Jim Cramer is a big proponent and user of Chaikin Analytics and the Power Gauge rating. Last week on the presentation with Mark, he said it's incredible. He said, I don't want to be on the other side of a Chaikin view. I follow every single one of Mark's ideas. So he, as well as other industry pros, are using the Power Gauge as well. So the media is also writing about us, and there are hedge funds, like Soros and Paulson, who also use the Power Gauge rating. So Jim Cramer, John Najarian, they use our service and our Power Gauge rating to help them make better trades. I know there's a lot of you from the John Carter Simpler Trading community, as well as John Malden from the Malden community. They both use the Power Gauge rating and Chaikin Analytics as well. In addition, we are written about and featured a lot in the financial press. Mark's quoted practically every week on CNBC.com. And we've had a number of really great articles written about Chaikin Analytics and Barron's. So kind of the ultimate, though, endorsement really was recently by ringing the NASDAQ bell at Times Square. And this culminated from a request that NASDAQ had made to us back in 2003 to take their small cap, large cap, and dividend achiever indices, overlay the Power Gauge rating on each one, and filter out stocks that were neutral or bearish, so that only bullish rated stocks remained. These three indices then have been put into real time since 2014. And New York Life's financial arm, Index IQ, New York Life Insurance's index arm, financial arm, Index IQ, then licensed these three indices from NASDAQ. And NASDAQ and Index IQ and Chaikin all rang the bell April 30th of this year to celebrate the 1-year anniversary of launching them. So it was pretty amazing to see in Times Square, which is the shot on the right here, that huge tower of the Power Gauge rating up for, what is that, like a 10-story building? It was really surreal. But all this is meant to say, and we are not licensed advisors, so we are not licensed to give advice. This is merely saying this is validation, that professionals, institutions, and individuals are all using the Power Gauge rating every day to make better investment decisions. All right, so let's go on to step 2, tips on what to buy. We have what we call a classic bull pattern, and it has to have these criteria. So again, rules-based. This is really easy, guys, to base your decision on rules, because you don't have to think, basically. You just, does it fit the pattern? Yes, no. If it does, it passes this test right here, then you look further. So let's take a look at a couple of the stocks. But before we do that, I want to bring your attention to this chart here that was created by a Dr. Wyckoff almost 100 years ago. And he taught how to invest in the stock market. And he patterned here, as you can see here, the course that a price takes on any given stock. And this is typically the pattern that it takes. And if you can kind of follow the black line, it zigzags across, it spikes up and it pulls back, spikes up again, goes across. So all this is to say that the normal way we're used to in the consumer industry of identifying pricing, goes out the window with stocks. They're not priced the way a fragrance, for instance, was at Elizabeth Arden, for instance. I mean, I could price a ounce of, say, Lagerfeld fragrance for, say, $100, and 6 months later, you still could buy that for $100. Obviously, that's not the case in stocks. The price fluctuates daily, actually every minute, every second it fluctuates. But if you understand and look for this type of pattern, this will help you with timing as well. This is a big help with timing. I'll be pointing it out along the way. So let's take the first example of WellCare. This is a stock, WCG. It's in the health medical care, which has been a very strong industry group, and I'll get to what that means on the next step. But let's look at the chart, which we evaluate from the bottom up. So the very bottom, this ribbon, green, yellow ribbon, is the power gauge rating. And you can see since mid-April, power gauge has been strong, bullish. So our 20-factor model has been saying since May, this stock is likely to outperform the market over the next 3 to 6 months. Okay, that's great. That's the first criteria a stock needs to pass to be bullish. Second is on this second one, relative strength versus the SPY. How strong is this stock relative to the S&P 500? Is it outperforming? If it's green, like you see here, again, since mid-April, it's outperforming the S&P 500. Well, that's good. If it's underperforming, why would you want to buy this stock? If it's underperforming, you're not likely to find a winner. And if it's underperforming, you might as well put your money into the SPY and get that average return of 10% a year, which isn't bad. But you don't need to go any further if this is not green like you see here. I'm going to skip over overbought, oversold, and return to that in a minute. But let's look at money flow, which I referenced earlier on that SPY chart in the beginning. As you can see, this is green. So what this means is money, institutional money, is coming into this stock. Mark created Chaikin Money Flow, I think it was over 40 years ago, 35, 40 years ago when he was on Wall Street. And what this does is it measures institutional money going in and out of a stock. Green means institutions are buying. Red, as you see here back in the spring, means institutions are selling. And why is that important? Well, remember the Wyckoff chart. Let me go back to the Wyckoff chart. How all this zigzagging is going on. If the institutions are buying it, you tend to see this price going up. If the institutions are selling, you tend to see it go sideways because it's the creation of supply and demand. Think back to that Buffett rule of, buy when others are selling and sell when others are buying. The institutions buying in such big numbers, far more than you or I could ever execute, push the price up because they're taking shares off the market. They're creating, there's more demand for fewer shares. So it's ratcheting up, as you can see here. And when you get everything else green, all lined up, power gauge, relative strength, and money flow, it's magic. I mean, look what's happened since late May, early June, when everything turned green. This stock has gone from, what is it, about 215 up to 296 just since May. I mean, imagine being in a stock like that. Well, I got into it here in July with this oversold buy. This little triangle here is a buy signal. And you can see other buy signals with those same characteristics. Oversold buys were triggered back in here in November and January. They can really help with timing because what this is saying is this stock was oversold. Okay, so what does oversold mean? Well, if you go down to this overbought, oversold indicator here, oversold means it's dipping down. It's doing one of those Wyckoff dips, Wyckoff pattern dips. And when it's oversold, you'll see it will dip here below the 30. that typically is a good time to buy if everything else is equal. I mean, I'm looking back here, it triggered an oversold buy here back in, looks like late February at a little under 200, but money flow was negative and the relative strength was just turning negative. So even though it said, hey, Sandy, this is a good time to buy this because it's on a dip, my other criteria were not met. So you want all of this to line up. You want this classic bull pattern that you see here. And then if you get a buy signal, that's terrific. You know, that can be the jog to your conscious to say, hey, you know, something's happening on this stock. It's now pulled back, you know, per that Wyckoff, you know, dip. And that was a good time to buy it. You want to sell them when they're up here. So when that's spiking up, that's when you want to sell. You want to buy them when they're down here on these dips. And you can see even here, there was an earlier dip late June, corresponded down here to when it was about, what is it, about 235 or so. So again, you know, use this for timing. It's really beneficial. Barclays had a target on this stock just in late July of 288. As you can see, it's now 297. It's really blown through this barrier, and today it was 300. This chart was taken a couple of days ago. So let's look at another classic bull. Now this is one that I bought recently, and I think this is a great example because it shows you how things can change. Okay, let's start again at the bottom. Power gauge turned green in late July, about the same time relative strength started to outperform, and look at the money flow coming in. And you know by now I love money flow. I really depend on money flow. So when there's a big chunk of it coming in like that, and it's oversold, this dipping down here, right? And I get an oversold buy signal, everything lined up. It's a classic bull pattern. I check my three factors: price to sales, insider buying, short interest. Are they all green? Yes. So for me, then that's a go. So I bought it August 17th with that oversold buy signal at 33. And it's 35 now, and it looks like it has a good run for it. So if you're looking for stock ideas, this is still oversold. It's a classic bull. You might want to put this on your watch list, watch it for a few days, see where it goes. But I'm bullish on this stock. All right, so I mentioned earlier you want to buy strong stocks in strong industry group. And the reason is clear. The research shows that 50% of a price move is attributed to the industry group. And what Zacks does is it divides each of the 5,000 stocks, it puts them into one of 64 buckets. And you can see the first 20 or so buckets here on the right: coal, business, investment fund, etc. So every stock goes into one of those buckets. Now, we rank them based on the proportion of bullish to bearish stocks in a particular industry group. And then we rank them in high-low sequence, as you can see here. But the research shows also that the stocks in the top 50% industry groups outperform the bottom 50% by a factor of 2 to 1. So think about that. So doesn't it make sense for you to be in strong industry groups, particularly when you're buying? Or sectors, some people call them sectors. You could identify one of these industry groups if you're particularly interested, say, for instance, in apparel. Okay, there's 12 bullish stocks. You could sort through each of the 12 stock charts to see if they fit your criteria. Insurance is also strong, but it has 45 stock charts. Do you really want to go through 45 stock charts looking for that classic bull pattern? Well, you don't have to. I used to do this, but a couple of years ago, we introduced a screener as part of the platform. And what the screener does is when you put in, you want in the screener, you can screen for parameters that fit your criteria. So let's look at that. This is the screener here. This is what I call my classic bull screener. So in other words, I can save these parameters just like this and pull it up at any time. Go one click on my screener, my bullish screener, and it'll populate the screen with this criteria. So let's see what I've done here. Okay, so strongest industry groups. I've screened for strongest industry groups, which means anything but the top 20, anything but stocks in the top 20% industry groups aren't going to show up in this screen. So I've already taken 5,000 stocks, reduced it to 1,152 stocks. Then I want to follow that classic bull pattern. I want a power gauge rating to at least be bullish. That brings me down to 293 stocks. And then I put in those three factors that I like: price to sales, short interest, insider activity. I want them to be strong. I'm down to 37. Now, in this one, I wanted the price level to be oversold. I wanted to be dipping down. I had money to spend. I wanted to buy a stock now. So that brought it down to 7. And then to fit that classic bull criteria of strong money flow and strong relative strength, when I added those parameters, I'm now down to 4 stocks. So you could see back here when I did this in April, and I run this screen practically every week, but when I ran it back here in April for a presentation, I got 4 stocks. So you can go from a universe of 5,000 stocks to 4, literally in seconds. Because again, I save all of this criteria. I just pull it up, it's all saved, and I hit this button down here, screen, and I get the stocks that meet that criteria. So is this a reliable method? Identifying these classic bulls? Well, you decide. Heidrick struggles back April 2nd. It was $30.40. It's now $44.50. It's up 46%. This stock, Hudson, $1.93. I've since added a filter, and this is in the workbook page as well. My filter data points, but I've added a filter so that I'm filtering out stocks under $15. These are very small stocks that tend to be highly volatile, and I don't want to trade them. So this wouldn't have even been a candidate now. SBS Commerce was $63.61. It's now $98. It's up 55% since April. And the only one that's down is this Model. But if you had invested in Model, you would have seen that it peaked in late July, and then it dropped 8% and broke down. Power gauge turned neutral, relative strength and negative flow and money flow turned negative. So you would have been out this stock after that 8% drop. So you wouldn't, and you would have had a nice run up. So 2 out of 3 have still shown to be big winners. So this is a reliable methodology that I've used for years, literally, and has guided me well. And I share these data points in that workbook so you can put it to practice yourself. All right, so let's look at a screener, a similar screener that I ran just last week for a presentation. Again, I got 4 stocks with the same criteria, only I didn't do the oversold. And Radeon came up, and it came up on my screener this week as well. Then you can save the list, and you can flip through each of the stock charts. And here's Radeon. The arrow shows you where it was last week, and it's been about the same since last week. But you tell me, is this still a classic bull pattern? Maybe if you'll just take that Q&A box and put into the Q&A box if you think this is still a classic bull pattern. I'll give you a second to put that in. Not seeing any, so it must be a delay. Oh, there they are. Now they're coming in. Okay, great. Robert, Walter, Charles, James, etc. Robert, Patrick. Okay, most of you say yes. James makes a really good point. It's not oversold. Okay. Last week it was oversold. And that's a really important distinction. So, James, good for you. It was dipping down last week. You now see it's dipping up. It's also bumping up against this dotted line here. These are volatility bands, Chaikin volatility bands. And I liken them to the channel when I'm sailing. I've been sailing on boats all my life. And I know when you are on any type of a boat, you really want to stay within the channel. You can run aground if you go outside that channel. And that can happen when you go outside this volatility band. It tends not to stay up there. It pulls back. And you can kind of see how that went into practice earlier in August, where it went up here and then it pulled back. So timing, again, timing is key. You want to wait now. I would not buy this stock now. I would put it on a watch list and wait for this to pull back into that 30 zone again, because it inevitably will. Most stocks do, because they follow this zigzag pattern. So, James, good for you for identifying that distinction. So yes, it's a classic bull, but if it were me, I would not buy this now. I would put it on a watch list and wait for it to be oversold, wait for one of those dips. Okay, we get a lot of testimonials from our members. Sandra here wrote us in January. She was up 47% last year. SPY was up 20% last year, which was awesome, but she was doubled that. She couldn't have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this. And here is how," was so empowering. "My husband has confidence in my judgment. Thank you, Chaikin Analytics, and I feel empowered. Life is good." So this is exactly how I want you all to feel at the end of this presentation. I want you to feel empowered that you can do this, because you can. All right, so I mentioned Mark and Jim Cramer gave a joint presentation with their stock ideas and their favorites just last week. Two of the stocks they talk about, and I'm adding this in because this kind of goes under how do you find these classic bulls and how do you find these good ideas. So they were talking about it and referencing and recommending Amgen. So I put an arrow on Amgen because that's where I bought it last week. Let's look at this, see if this passed my criteria, which it obviously did, or I wouldn't have bought it. But look, power gauge is strong since late May, outperforming the market, and some nice money flow coming in. And today it triggered a money flow buy signal. So last week I bought it on this dip. It was oversold last week. It's coming out of that this week. So just because it has a money flow buy doesn't mean you have to buy it right away. It's just saying money, there's a lot of money coming in here. And you can see by the big chunk of green that that's true. If I didn't already own this, I would keep this on my watch list and wait for that pullback, either an oversold buy signal or just watch this until it comes back down. The other stock, or one of the other stocks, I should say, that they talked about was Alphabet. So again, classic bull pattern, but a little bit of money coming out of this now. It's not untypical to have some money coming out, as you can see here in June and July and back here in February. That's something March, April, May, I would not be keen on buying a stock when it had that kind of pattern right then. I would have waited for it to turn in June when everything else turned in June. But now you can look, a couple of weeks ago, it triggered an oversold buy signal. It still is oversold. It's kind of stayed down in that range, right? But the money flow is negative now. So I think this is still a great stock idea. And certainly if Jim Cramer and Mark Chaikin are two of the best market strategists on Wall Street are saying this is a good stock to buy, I certainly take their word for it. With timing, if what I'm doing is just waiting. I want money flow to be strong. Now, the stock also is expensive. It's $1,252. And you said, oh my God, I can't afford to buy a stock that's $1,200. Well, what I do is I buy the same amount I put the same amount of money when I invest in any stock. So let's say for the sake of argument, it's $10,000. Whether it's Alphabet at $1,250 a share, or whether it's something at $100 a share, the amount that I invest is $10,000. So for me, this would be like buying eight shares of stock using this example of 10,000. So you don't have to think of it, oh, it's too expensive, I can't buy it. The money is the same. $10,000, $15, $20,000, whatever your typical buy is, it's the same amount of money, whether you're putting it into 5 shares or 50 shares, it doesn't matter. The percent up and down is going to ride the same way. So this was in the news today. I don't know if you all were aware, but, oh, and here's the news down here. We have, at the very bottom of this chart, you can see news articles. So you can click on these news articles and find out what is being said, which is really can be helpful directionally. You can also click on this little arrow at the bottom right and get more news articles. But Trump was tweeting again today, saying that Google is suppressing good news in their search criteria, and they're doing this because they want to publish fake news. So I think the market's gotten pretty much immune to Trump's tweets, but if you're not immune to them, I suggest you get immune to them because they're meaningless. And the market, the stocks that he typically has tweeted about over the course of the last couple of years, it might move the needle for a day or a week, but over the long term, which is the horizon that I look at, it's meaningless. You can actually use those pullbacks if there is a pullback from one of his tweets. You can use that as a buying opportunity. Okay, so how else do you find these ideas? We have what we call a stock discovery engine, and you can see I highlighted it here. This is on the navigation bar of the platform. You think of it as a Pandora for stocks. You seed it with a stock, and then it will tell you other stocks like that stock. So I just bought Amgen. I put Amgen in. What other stocks are like Amgen? Well, you can see it gave me these other 5 ideas right here, and then I can just click on each one of those logos and get the stock chart. So this is a really cool way to find great stock ideas as well. And let's look at Celgene. I own this stock, but today it triggered a money flow buy, which is pretty cool. This is a stock that Mark also recommended last week to Jim Cramer. Cramer thought it was interesting. He said it wasn't on his radar screen. He put it on his radar screen. He said he was going to watch it. So he could be watching now and see that it triggered a money flow buy. But it has this classic bull pattern, right? It's oversold, and you've got a money flow buy. So for me, this all, and those factors that I focus on were positive. So this was all good. So I recently bought this stock. But this, again, could be another stock idea for you. And that's how you can find them really easily. Okay, so let's get into timing. And I probably will run a little bit over. If you can stay, that's great. If you can't stay, no worries. By noon tomorrow, you'll get the replay in the email, so you can catch up on this last section. Okay, timing, when to buy and sell. Well, I've been pointing out the buy signals along the way, those green triangles that have corresponding sell signals, red triangles. I've been pointing out the oversold indicator, buying on the dips, selling on the spikes. I have certain rules, and these again are in that workbook. So when I buy, ideally I want a buy signal. It's not essential, but that's nice to have. I definitely want it to be oversold, dipping down, and I want it to have that classic bull pattern. Strong power gauge rating, strong money flow, strong relative strength. How do I know when those buy signals have triggered without going through stock chart by stock chart looking for them? Well, we make this easy. This is my email that came in this morning before the open, telling me what signals have triggered in my stock list. And this is really great. This is a pretty recent feature that we've just added. But before I even open up my platform in the morning to go through my stocks and go through my watch list stocks, it's telling me that here are the signals. So you can see Amgen today, we're just talking about that, had a money flow buy, and you'll see Celgene had a money flow buy. And it also tells me other things that can, important changes that can affect the price, like the rating has turned bullish on two of the stocks that I own, Gilead and JP Morgan. It'll also tell me if an analyst has raised or lowered an estimate, which is great. I mean, these things all can impact the price, so I want to know about it. You can also access that on the platform itself, as I did here back in the example I'm using is July. I overlay this alerts view on my watch list as well as my stock list every day. I do it in the morning. I do it in the afternoon after the close because I want to see what's changed, you know, and then I flip through each of the stock charts in my stock list, the stocks I own, the 10 or 15 stocks that I own. And then I go through the bullish and very bullish stocks in my watch list. If those ratings have turned neutral, I don't need to take them off the list. I just don't even look at them. And since you can sort by power gauge rating, I'm only looking at the green ones first. So it kind of ranks itself in order of importance. So let's look at CNC. So back in July, CNC, Centene, was trading at 131. There's the buy signal on July 12th. It's up 10% from there now. You can see it's up here. It's up at like 145, I think is where it closed today, 145. And look at this pattern. I mean, you got to love this pattern, right? All of this green, good grief. I bought this back in January on a dip at 109, so it's now 145. So, I mean, you can see the power of using this type of 5-step approach to find winners like Centene and knowing when to buy. Okay, when to sell. Okay, another scenario of rules. I'm going to sell either to take a profit or I'm going to sell because I sense the stock is breaking down. Okay, when I sell to take a profit, here's the criteria. It hits that upper volatility band, which I described as that channel marker. If I'm going outside of the channel, I'm likely to run aground, so I'm going to just sell it and it'll pull back. It's overbought. It's spiking up as opposed to dipping down on the overbought, oversold, right? Or something we really haven't talked about, but it spikes up after a strong earnings report. And that can easily happen if they beat analyst estimates and raise guidance. So let's look at a couple of examples here. This is a stock, Mammoth Energy, that I bought at this yellow arrow here back in April. Again, on a buy signal, money flow by, money was coming into it. Everything else was green, and it was dipping down. It was oversold. So I bought the stock at 32. And I wanted to buy it before earnings because I could see from the last earnings report, it spiked up nicely, right? I mean, gosh, it went from like a little bit under 20, spiked up to over 30. So I thought, well, and the earnings component was strong. The earnings factors were strong in the power gauge rating. So I bought the stock. It looks like it dipped down, but then it turned and went back up again. And then it went way up, like 18% up over here, late May. And that's when you say, and hit that upper volatility band. That's when you say, gee, this is a gift from the gods. Thank you very much. I'm going to take my profit and let somebody else buy this stock. So again, you see, it's spiking up. Something happened. And it turned out a day or two later, I saw in the news, there's a news report on this platform at the bottom. But you could see a news release about a contract that one of their subsidiaries signed with Puerto Rico to complete the rest of the electrical transportation and distribution system that had been destroyed by Hurricane Maria. And they were going to reconstruct the power grid. So a huge contract, right? I mean, a giant contract. And that's when other people were piling into the stock saying, oh, good, that's all good news for the stock. I'm going to buy it because it's likely to go up. That's when I'm greedy. I'm selling when others are buying. And so I sold it up here at 38. And you can see a month or so later, it drops 10%. Stock's down now at 29, which is down 22% from where I sold it up here. So this is how powerful these analytics can be. By getting your eye used to looking at these charts and reading the patterns and understanding the patterns and taking advantage of these spikes to sell and taking advantage of the dips when you're buying. You can see the stock is now breaking down. It turned neutral. When I took that profit, it had just turned neutral and there was money coming out of it. So it was kind of warning me saying, hey, you might want to look at getting out of the stock because it's not all rosy here. And it has, in fact, broken down. I don't know why. Doesn't matter why, but it has. And you can see now relative strength has recently turned. So now this stock is really, in a downward spiral. So you don't want to buy a stock back here like I did in April at 32, and watch it go down to 29 when you could have gotten out at 38. So this is not atypical. Prices can drop really quickly like they did here and like they did here and like they did here. They can change in a day. So take your profit when you see it. I actually sometimes, say, oh, gee, I took the profit a little bit too soon. I could have stayed in a little longer, but you know what? It's okay. Because I take that money, I put it into another classic bull, and I don't look back. All right, so this is another stock that I bought back here. Had been on a screener. I put it on my watch list. I bought it late June at 74 with this oversold buy signal, classic bull pattern, right? And oversold and the buy signal. Thank you very much. Had a pullback. Again, this was on Trump's tariffs and all of the volatility that went with that, where every time he came out with a new tariff, the market would react and pull back a couple of points. And that's what happened with this stock. So I was just waiting for the right time. I got the 2% pullback. I got the oversold buy, took advantage, of the fear and the volatility, and I bought the dip. Now I sold it up here again on an earnings spike. 2 weeks later they reported earnings, spiked up. I mean, look at that nice spike. I said, thanks very much. And I took my profit and got back. What I often do, though, because I know it typically pulls back and I could buy it cheaper, what I often do is buy it back here when everything is really strong. But the money flow wasn't strong enough for me to say this is a stock that I really want to put my money into. So I was happy with the 19% profit in 2 weeks' time. I took my money and put it in something else. Okay, the other scenario is when stock is breaking down. So here's my rules for a breakdown. Power gauge turns neutral and another indicator like money flow or relative strength turns negative. Certainly if I get that red triangle, the sell signal, or the price drops below that orange line. I haven't been pointing it out, but that's like a 200-day moving average, or it drops below that lower volatility band. Here's the lower volatility band. The orange line here is a 200-day average. And again, these are the volatility bands. So let's look at Cigna. And this is the last example I have. So this is a stock I bought. Well, actually, I bought back in 2016, classic bull, all of 16. Bought more in the fall of 2017 here at 186. And watch the stock go all the way up here to like 220. I should have gotten out here because upper volatility band and there was some negative money flow. That's a really powerful indicator that there's trouble ahead. However, I did wait till I got that sell signal, relative strength sell signal came in a few days later, I guess. And I sold at 208. But I could sense that things were breaking down. Money flow, you see here, just ticked red. Relative strength had just ticked red, and the power gauge was neutral. So you can see what's happened. The stock did, in fact, break down. It went all the way down to, about 160 or so. But now, look what's happening. This is what we call a personality change. Things can turn around. Power gauge is now green. Relative strength looks like it's even. This looks like it's flipping up to getting ready to go positive. Stock's oversold. And there's money coming in. And there's a money flow buy. So now that you've been looking at these stock charts for the last hour, Josh is going to put up a poll. And I'm going to ask you whether you think this would be a stock to buy now. Yes or no? Based on everything you've learned.
Sandy, I didn't know that you were going to include this, although I guess
sorry.
I could have guessed. I did put up the poll, though. I could have guessed. I forgot about this. But Dan Russo, our chief market strategist, and I were discussing this stock exactly today.
Oh, what did you say?
Whether or not we should be buying it now or not.
And what was the consensus?
Well, I think it depends a little bit on how aggressive you'd like to be. And I'm an options trader, so I thought that buying an option a little ways out in time and slightly in the money would probably be a great play, as it looks like it's started to turn around. But we admitted that was a bit of an aggressive way to do it. So here you can see what everybody said. I'll share the results.
Okay, great.
I'm a little more aggressive trader than most, though. So
we've got some aggressive traders as well. 78% of you said yes, and 22% said no. So I'd be more inclined to be in the yes camp as well. This stock looks like it's turning around to me, but I certainly defer to Dan Russo too. He's our chief market strategist and been analyzing stocks for years.
He liked it. He was the one that brought the idea up.
Mm-hmm.
I just thought it was maybe a little. The relative strength is just turning, and
right.
So we thought that might be a little early on that. But otherwise, I agree with you. It looks good.
Okay, so what you could do with this stock is put it on your watch list and wait for that relative strength to go positive. And because it's rated very bullish, it's going to be at the top of your watch list. You're going to be able to flip through this stock every day and see and wait for that time. You also can set up alerts. So you can overlay the alerts view and see if there's any signals, estimate changes, power gauge rating changes, etc., that have triggered on this particular stock as well. So that's what I would do. Okay, another testimonial. Through following your excellent system, my portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Does that sound familiar? Consistent earnings. Again, consistent is key. We're just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So I can't stress enough how important it is to have a methodology. Otherwise, you're just throwing darts, really, at the stock market and basing your decisions on what you hear on the news or what you hear on Twitter, or letting emotions, guide you. The methodology is really critical. Which for me and for us at Chaikin, a lot of us at Chaikin, is this 5-step methodology to follow to give you consistent earnings and confidence. Okay, very quickly, there are 2 more stock charts I have to go over, I forgot. But how to avoid the pitfalls. And again, the classic bear is the exact opposite of the classic bull. And let's go back to Warren Buffett. Avoid risk whenever you can. That sounds obvious, right? But in investing, it's inevitable that you're going to have some losers. If you are so risk adverse that you can't sleep at night if you have a loss, then investing may not be the right thing for you. But if you understand that part of the process is you're gonna have some losses. It's just Warren Buffett has losses. It's everyone who invests has losses at one time or the other. The key is to how to minimize that, and that's what our analytics can help you do. So let's look at a classic bull. This is Whirlpool. And by now you've been looking at a lot of these charts. So you see a sea of red, right? Everything is red. And you've had sell signals along the way, these red triangles, before this 15% drop when they disappointed on earnings. So it's all there. I mean, if you were a member of Chaikin and you owned Whirlpool, you would have been out of this stock, well, before this last 12 months, actually, because it looks like it's been negative money flow and negative relative strength since a year ago. This 15% drop was on negative earnings guidance due to the increased tariff costs for steel, because steel is one of their main raw materials. And they got slammed on importing steel and Trump's new tariff laws. So there also was a Brazilian trucker strike. But you don't even have to know that. I mean, you can be totally oblivious to the news, and looking at the red, you would have known to be out of this stock well before earnings. And let's look at Philip Morris, another classic bull. Again, a 15% drop when they reported the stock drop. It was down 15% on the day. So there's a little money coming into this stock right now, but would that encourage you to buy it? I hope you all say no, because the power gauge rating is still red and it's underperforming the market. Yes, it's oversold, and yes, there's money in, but as recently as earlier in the month, you got a sell signal. So how do you find these stocks? Well, Josh has options classes for our members twice a week. I think it's Tuesday and Thursday afternoon. Josh, correct me if I'm wrong.
Tuesday, Thursday morning, we had a great
Morning.
session this morning.
Okay, Tuesday and Thursday mornings. All of our members are welcome to learn how to trade options, and I haven't even gotten into it, but we have an overlay with an options play overlay onto our workstation that really help you identify key option strategies, risk reward strategies. So how do you find ideas like this? Well, Dan Russo, who we've been talking about, our chief market strategist, puts out a note every day. He actually highlighted this stock back in April, right before that 15% drop. And he highlighted this oversold sell signal up here before it dropped. And people who followed his advice and put option on there made a lot of money, including yours truly, Josh. So there's a number of ways you can find stocks like this. You can use a screener to find them. You can go into your industry group sort, go into the weakest industry groups. You can use that discovery engine, like put Whirlpool or Philip Morris into your, seed it with that, see what other losers it comes up with. You also can follow Dan Russo and Mark Chaikin's stock ideas as well, which are issued daily by Dan and every Sunday by Mark. So thank you for staying with me. I promised that I would show you 5 steps to find winning stocks in 15 minutes a day. This is a methodology that works for you. Works for me. I'm sure it can work for you too. Think about where you want to spend some of those profits in addition to putting most of that money into your retirement account, but have some fun along the way, for heaven's sake. I mean, life is short. Things can happen. So I'm a big believer of enjoying what we can. The platform we've been talking about is Chaikin Analytics. There you can see on the desktop the options play overlay for those of you who are interested in trading options. And it also is available on iPad, bundled into the same subscription. We've been given the best ideas, or awarded, I should say, the best ideas platform back in 2017 for best stock ideas platform. And this year we were awarded the best in show. So our peers in the industry recognize the value that Chaikin gives investors. So we usually have a price for the annual subscription to the analytics, which is $2,195. We typically offer a webinar special that drops that price by $300 or $400, but we're dropping it even more. I mean, this is like the biggest special of the year, I think. Taking $596 off to match the Labor Day special that's going out to our followers next week. So you can get kind of a sneak peek to this lower price and lock in practically a $1,600 a year subscription price, which saves you almost $600 for an annual subscription. So I hope you'll take us up on the offer as early as tomorrow. You'll be in what we call an onboarding, which is like an orientation webinar that Josh's colleague, David, gives, and he'll walk you through how to set up a watch list, how to use that alerts view to know when the signals have triggered, et cetera, so that you get confident with the platform. We also include, well, in addition to the 20-factor model, we include the stock discovery engine, which I showed you, the screener, which I showed you, the options play, which I didn't show you, but there's like an example of the 3 risk-reward scenarios it'll point to. And I think I showed you the one-day view. You can overlay this one-day view so that you get when you're trading that particular day, you can get up to the second pricing information. Earnings, I think I sort of pointed that out. We give you the date that the stock company is reporting earnings, whether they beat or exceeded in previous earnings reports, which are very predictive of how they're going to come in this coming one. The Market Insights, which is a report Mark puts out every Sunday night to our members, recapping the past week, outlining what he sees for the following week, and highlighting specific stocks to buy or to sell. I know there's a lot of Malden followers on. John Malden, as I mentioned earlier, has used the analytics or uses it every day. He says his analysts are enthusiastic users of Chaikin Analytics and use it to analyze the traits and recommendations of our writing team, giving them feedback and insights into their own ideas. Mark's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. So John's very highly regarded. We take that as a wonderful compliment from John. I think this is part of what is really makes Chaikin special, is that we invest so much in you, in wanting you to understand how to use the platform and to use it to make money. So every week we have small group tutorials that members are invited to come to, as many as they want, unlimited. And if they find that their trading approach or investing approach is such that they need a little more counseling, you can sign up and schedule a one-on-one coaching session free, unlimited. That's one-on-one. I don't know of any other stock market software company that invests that much in training, but we feel, our success is based on your success. So again, we're taking the $2,195 annual price and reducing it by almost $600 to $1,599 as an early Labor Day special. So with that, I'm going to say thank you all for attending today's session. And Josh, I'll turn it back to you to close it off.
Sandy, thank you so much for your time today. And everybody, thank you for joining us. You can join Chaikin Analytics by clicking the link in the chat window. It will take you directly to the offer. The discount will be applied automatically. That link is www.chaikinanalytics.com/Sandy. Or you can call us right now, 877-697-6783. That is 877-697-6783. As Sandy mentioned, we have a ton of content and members of the client support and success team here to help you. We can have you on an onboard session tomorrow. If you can't make it, we record and archive all of it so we can get you a recording so you can get up and running as soon as possible. Again, join us, www.chaikinanalytics.com/Sandy, or call us at 877-697-6783 and take advantage of this amazing offer. I look forward to seeing all of you in a future member session. Thank you.